Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're taking a look at MicroStrategy.
And if you find our talks useful, please consider a subscribe, like, and comment underneath.
It really helps us out.
Okay, let's get right into it. We are looking at a company today that probably creates more arguments at dinner tables than politics.
That's a good way to put it.
I looked at the ticker MSTR, and honestly, I just found myself staring at the ceiling trying to figure out what category this thing even belongs in. I mean, is it a software company? Is it a bank? Is it just a Bitcoin piggy bank disguised as a corporation? It feels like it's trying to be everything at once.
That is the multi-billion-dollar question, isn't it? And honestly, that confusion is exactly why this stock is so volatile and, so fascinating.
Right.
If you try to analyze MicroStrategy using a traditional textbook, like if you just look at their PE ratio as a software business, you are going to think the market has completely lost its mind.
Yeah, the numbers don't add up that way.
They don't. But if you shift your perspective and you look at it through the lens of what we call the Bitcoin treasury model, suddenly all that chaos starts to look like a very deliberate, calculated machine.
The Bitcoin treasury model. Okay, it sounds very official, almost like a government program. But let's strip away the marketing speak. What does that actually mean for the regular investor listening right now? What are they buying?
It means the company has fundamentally changed its DNA. Historically, MicroStrategy was, and look, technically it still is, an enterprise analytics software company.
Right, business intelligence.
Exactly. They sell tools to big corporations. But a few years ago, under Michael Saylor, they made a decision that was completely unheard of for a publicly traded company. They decided that keeping cash reserves in U.S. dollars was a losing strategy because of inflation. So they decided to convert their entire treasury into Bitcoin.
Which at the time must have sounded absolutely insane to most boardrooms. I mean, companies usually buy treasury bonds
or just keep cash completely. But this strategy created a massive moat. In business, a moat is usually a patent or some unique product.
A secret recipe.
Right. Here, the moat was that MicroStrategy became the primary proxy for institutional investors to get Bitcoin exposure. Think about it. If you were managing a massive pension fund in, say, 2024 or 2025, you couldn't just download a crypto app and buy coins.
No, the compliance rules would never allow it. You need a security. You need a stock ticker that fits into your existing software.
Exactly. So you bought MicroStrategy. And this created a massive network effect. Even though you have competitors now, companies like Evernorth trying a similar thing with XRP, MicroStrategy has the scale.
And the first mover advantage.
And honestly, they have the Saylor effect.
Yeah.
His advocacy creates a kind of institutional loyalty that is very, very hard to replicate.
It's almost like brand loyalty, but for a balance sheet strategy. But okay, let's talk numbers, because this is where my jaw just hit the floor when I was prepping.
I was waiting for this.
I saw a number for net margin that had to be a typo. 2,055%. A 2,000% profit margin. How is that even mathematically possible? You can't sell software for 2,000 times what it costs to make.
You can't. And that is exactly why you have to separate the operating business from the treasury strategy. That 2,055% net margin isn't coming from selling more analytics dashboards.
Okay.
It's largely driven by the Bitcoin strategy. When Bitcoin's price goes up, their earnings on paper just explode because the value of their treasury assets skyrockets. It completely dwarfs the actual money they make from software.
So effectively, their earnings are a reflection of their savings account going to the moon, not necessarily their day-to-day business getting, 2,000% better.
Precisely. If you look at their Q3 performance, they reported a net income of $2.8 billion, just purely massive.
Yeah.
Their earnings per share, the EPS, came in at $8.43.
And the estimate was what, like 5 something?
Wall Street analysts were expecting $5.76.
So they didn't just beat estimates, they absolutely destroyed them.
They crushed it. But, and this is a really important but, we can't ignore the legacy business. The critics always scream, oh, they're just a crypto shell company, the software is dead.
Right.
But the data says otherwise. Their gross profit is robust, around $90.68 million. And actually, they are outperforming their peers in the IT sector. Revenue growth is about 10.87% as of September 2025.
Wow, that's a really critical nugget. Because if the software business was dying, shrinking by 10% a year, this whole thing would feel much, much riskier. But nearly 11% growth in legacy tech, that proves they can walk and chew gum at the same time.
It does. It proves they are running a profitable software business that generates cash. And then, here's the key. They take that cash plus massive financing inflows. over $22 billion of it.
And they pour it into Bitcoin.
They poured into Bitcoin.
Yeah.
The data shows investing outflows imply they bought over 22,000 Bitcoin recently.
Okay, you used the phrase financing inflows. That is a very polite way of saying debt. They're borrowing money to buy a volatile asset?
They are.
Usually when I hear about a company borrowing billions to buy something that can drop 20% in a week, I start getting nervous about bankruptcy risk. How fragile are they really?
This is where the expert view has to separate from the panic view. If you just read headlines, it sounds reckless. But look at the debt-to-equity ratio. It's sitting between 0.16 and 0.25.
That is incredibly low. I feel like most tech companies or, industrials run way higher than that.
They do. For a company this aggressive, you'd expect that number to be over 1.0, maybe 2.0. But at 0.16, they aren't over-leveraged in the traditional sense, not relative to their equity.
So how are they doing it?
They're using convertible debt very strategically. Convertible notes let them borrow at very low interest rates because the lenders have the option to convert that debt into stock later. It's cheap money.
Okay.
So they aren't betting the farm in a way that risks immediate insolvency, even if the strategy feels aggressive.
So high growth, massive margins, low debt. If we stop the show right here, it sounds like the perfect stock.
It does sound good on paper.
Except we have to address the elephant in the room. Or maybe the bear in the room.
The very large, very angry bear, yes.
The stock chart right now is, it's painful. If you zoom out to the last year, you're down 65%. In the last 6 months alone, you've lost 67% of your value.
It's a bloodbath. There's just no sugarcoating it.
If you bought this at the top because your friend said it was a sure thing, you are hurting badly.
And this connects directly back to that correlation we talked about. Bitcoin is down 16% year to date because MicroStrategy is effectively a leveraged play on Bitcoin when Bitcoin sneezes.
MicroStrategy catches the flu.
Catches the flu, exactly. It acts like a high beta asset, goes up twice as fast, but it crashes twice as hard.
And it seems like the big money is feeling that pain too. I was reading about the public pension funds.
That's a critical piece of the sentiment puzzle. Public pension funds, retirement money for teachers, firefighters, they jumped in heavily over the last 2 years.
Right.
And now reports are suggesting they're down about 60% on those bets.
Ouch. That's not just a line on a chart. That's people's retirements.
It is. And when you see that kind of drawdown, it signals what we call forced selling exhaustion. These big funds have likely sold what they needed to sell to stop the bleeding. We're entering what looks like a capitulation zone.
Capitulation zone. Sounds like a scene from a war movie. What does that mean for the stock price?
It means we're hitting a point where everyone who was going to panic sell has already panic sold. The price is hovering near $122.40. Psychologically, this is where the weak hands fold. And interestingly, if you look at their Bitcoin holdings, the company's average purchase price is around $76,052 per Bitcoin.
And Bitcoin is trading below that right now.
Correct. So technically, their treasury is underwater on those recent purchases. That creates a lot of fear in the headlines.
But here's the paradox, and this is what I really want you to explain. Despite the crash, despite the pensions losing 60%, despite the treasury being underwater, the analysts are still saying, buy.
It is fascinating, isn't it? Take Canaccord. They recently came out and slashed their price target on MicroStrategy by a whopping 60%.
60%. Usually when an analyst cuts a target that much, they downgrade the stock to hold or sell. They say, get out, we were wrong.
But they didn't. Canaccord reiterated their buy rating.
Why?
Because of the asymmetry. They recognize the volatility is painful right now, but they also see the resilience of the model. The consensus among analysts, and we're looking at about 5 to 14 different firms here, is overwhelmingly buy.
And their price targets.
The targets range from $360 all the way up to $445.
Wait, hold on. If the stock is at $120 and the low-end target is $360.
That implies an upside of over 170%. That's why they keep the buy rating. They're betting that this is a cyclical low, not a fundamental collapse. They believe when the crypto market turns, MicroStrategy is the vehicle that will capture the most value.
That is a massive potential bounce. But potential doesn't pay the rent. We need a catalyst.
Yeah.
And folks, if you're listening to this on the day it drops, Thursday, February 5th, 2026, today is the day.
It is D-Day for MicroStrategy. Q4 earnings are released today.
And the expectations are mixed.
Mixed is being polite. The consensus estimate for earnings per share is negative $18.64.
Negative $18. Wait, we just said they made positive $8 last quarter. How do you swing from a huge profit to a massive so quickly?
Impairment charges. It goes back to that accounting nuance. If the Bitcoin price drops below their cost basis at any point during the quarter, they have to write down the value as a loss on paper.
Even if they didn't sell.
Even if they didn't sell. It doesn't mean they lost the money for real, but it makes the headline number look absolutely horrific.
So the trading algorithms read huge loss and just dump the stock.
Potentially. But remember what I said about Q3. They beat estimates by $2.66. This company has a history of surprising Wall Street.
So the bar is set really, really low.
Extremely low. And in the trading world, a low bar is easier to jump over. History suggests that on positive news, or even just less bad news, this stock can pop 5 or 6% almost instantly.
So what should we be watching for when that report hits the wire today? Obviously the EPS number, but what else?
You need to look at the commentary on their convertible debt strategies. Are they going to keep borrowing to buy more? And, crucially, did they buy the dip?
Ah, the poker move.
Exactly. If they reveal they purchased more Bitcoin while prices were crashing, that signals confidence. It tells the market, we aren't scared, we're accumulating. If they sat on their hands, the market might read that as hesitation.
It's a game of chicken. And you also mentioned the Fed. Raphael Bostic is speaking today, too.
Yes, Bostic from the Fed is speaking. In 2026, the link between Fed policy and crypto assets is tighter than ever. Any commentary on interest rates impacts Bitcoin, which then impacts MicroStrategy. And honestly, we just need to watch for any rotation back into the crypto sector. If the macro environment shifts even a little bit today, MicroStrategy acts like a coiled spring.
Okay, so we have the potential for a massive pop, but we have to be responsible here. Let's look at the downside. What's the nightmare scenario? What makes this go much lower?
The biggest risk is just sustained Bitcoin volatility to the downside. If Bitcoin stays below, say, $73,000 and significantly below their $76,000 cost basis, for a long time the pressure builds. It risks impairment, which just ruins their earnings reports quarter after quarter.
And what about that debt? You said it was low, but surely there's a catch.
The catch is forced redemptions. Some of their convertible notes have clauses where if the stock price stays too low for too long, the holders can demand cash back instead of converting to shares. And if that happens during a cash crunch, that is a serious problem.
They would have to sell Bitcoin to pay off the debt.
Which would drive the price of Bitcoin down.
Which hurts their stock more. The death spiral.
That is the bear case, exactly. Plus, you have the sentiment overhang. When pension funds are down 60%, there's a lot of anger in the market. If the Bitcoin bears persist, the downside is amplified because, like we said, this is a leveraged play.
It goes down 2x fast, too.
It does. It is not for the faint of heart.
So we've looked at the 2,000% margins, the 65% crash, the underwater treasury, and these huge upside targets. Where do you land? If you had to put a score on MicroStrategy right now, today, February 5th.
I'm giving it a bullish score of 7 out of 10.
7 out of 10. That's pretty confident given the sea of red ink we're seeing. Walk me through that logic.
It comes down to fundamentals versus sentiment. The sentiment's terrible, which is often a contrarian buy signal.
Yeah.
But fundamentally, the moat is strong. No one else has this level of Bitcoin accumulation. The software business growth is real at nearly 11%. And the debt is manageable at that 0.16 debt to equity.
So you think the risk is basically priced in at this point?
I think a lot of the fear is priced in at $120 a share. The elevator pitch here is simple. MicroStrategy offers unmatched crypto leverage with top-tier gross profits of over $90 million. Despite the 65% drawdown, the potential for a rebound is, well, it's mathematical if you believe Bitcoin will eventually recover.
So what's the play? Is this a buy and hold forever?
Ideally, if you're a trader, this is a swing trade into and post earnings today.
Yeah.
You're playing the volatility. But for the smart wealth listener, this is really a multi-year hold. You're buying it for the next Bitcoin cycle peak.
Okay.
You have to be willing to stomach these drops, like we are seeing now, to get that 170% upside the analysts are talking about.
It's the ultimate test of conviction. Okay, let's wrap this up.
Sure.
We've got a company that is effectively a leveraged bank for the world's biggest cryptocurrency, disguised as a profitable software firm. It's taken a beating down 67% in 6 months, but the engine under the hood is generating massive margins, and analysts are screaming that it's undervalued.
This is a summary. A bumpy ride, but a very, very powerful engine.
Here's my final thought for you to chew on today. We know earnings are dropping in just a few hours. We know the stock is beaten down. We know the weak hands, the tourists, the nervous pension managers have likely already folded.
Right.
So if everyone who wanted to sell has already sold, and the company beats that incredibly low expectation today, is this the moment that the spring uncoils? Are we looking at the bottom of the chart right before the next massive run?
That is the multi-billion-dollar question.
Thanks for listening to Smart Wealth with Joshua. See you next time.